Hello, today we are solving Jan 2023 paper, Unit 2, question number 1, part C of the question. Calculate the profit or loss for each of the 4 mines of the Middle East Mining PLC for the year ended 31st December 2022. There are 4 mines. In the first part, we had calculated the quantity of aluminium that's going to be extracted from the ore they have mined. Then they had asked in the part B to calculate the total fixed cost which had arisen from 3 costs, okay, salary plus office overhead plus depreciation. So we had to calculate the total fixed cost. In this part C, we have to calculate the profit or loss. So profit or loss is going to be revenue minus all the costs, okay, all the costs. It's going to give us the profit or loss for each of the 4 mines. So let's calculate. First one is the revenue. What is the sales revenue they are going to earn? We can see that they have said the world price of aluminium is 220 per kilogram. So they are going to sell at this 220 pound per kilogram they are going to sell. They have certain quantity of aluminium that was extracted. So for each, if they are going to sell, let's see how much of revenue they are going to earn. So revenue. So we had calculated they are going to produce some 3 million, okay, 3 million tons of kg, sorry, 3 million kgs of aluminium, and they are going to sell at 2.2. So that is going to be equal to 2.2 times 3, that is going to be equal to 660,000. Okay, so revenue is going to be equal to, for Alcaran, okay, is going to be equal to 2.2 times it is going to be equal to 2.2 times 3 million, that is equal to 6.6 million. So okay, this is the revenue they are going to earn. Okay, then revenue for next one is the Bonitas. So for revenue for Bonitas, it's going to 2.2, and they are going to extract 20 million kgs of aluminium. So 20 million into 2.2, that is going to be equal to 4.4. So 4 okay, 440, okay. So they are going to extract, they are going to earn around 44 million, okay, pounds in revenue. So that is going to be equal to 44 million. Okay, and then you have revenue for Carbide. Okay, the revenue for Carbide is going to be equal to 2.2, and they are producing 40 million kgs of aluminium. So 40 into 2.2, that is equal to 88. Okay, this is going to be 88 million. So that's the revenue they are going to earn. And then you have the Dalmora. So revenue earned by Dalmora is going to be 2.2, and they are going to extract 5 million. So it is 5 times 2.2, that is going to be equal to, so that is going to be equal to 11 million. Okay, Next you have the fixed cost, and then you have the variable costs. Now let's calculate all the variable cost. The variable costs are going to vary as per the quantity produced, or the quantity which varies. Whereas fixed cost we have already calculated, it is fixed throughout the year. It is not dependent on the aluminium produced or the aluminium extracted. So other direct materials, other direct material cost, this is a type of it is next cost. So other direct cost they have given, it is 750,000. So 750,000, and they have not they have already calculated based on the quantity of aluminium, and they have given, so we have to just put here, this is one of the costs. Then you have carbide, 9.6 million associated with the production of aluminium. So these are the variable costs, and they have calculated and they have given, so you take the direct work thing. Then they have given direct labor. Direct labor is also they have given. So it is the same thing you will write here. So 3.510 thousand, and this one is 23,200,000. And then you have carbide. So these are the labor costs incurred. Then you have the direct power costs, so that also you have to include. Direct power costs they have given directly here, so they have calculated. We have to just enter those values and add up all the costs that's incurred for the production of each aluminium. And then you have the fixed cost. Then you have the fixed cost, which we had calculated in the part B, 1B question. So let's put that fixed cost here. Incurred, the fixed cost incurred due to each mine, this is 510,000. Then this one is 1,360,000. And then you have 1,700,000. And then you have 960,000. Now let's calculate the total cost. The total cost is including all of these four costs you have to add up to get the total cost. Now let's add up each of the total costs. So it is going to be equal to 750 plus 3510 plus 1800 plus 510. So that is going to be equal to 657,000. This is the total cost. This is the total cost. And then then let's calculate the Bonita's total cost. 4,800 plus 23,200 plus 8 plus plus 1.1360 thousand, you add up, so that is going to be equal to 37,360 thousand. 37,360 thousand. And then you have the total cost for carbide, so that is going to be equal to 9,600,000 plus 540,400,000 plus 20 million plus 1,700,000. You add up all this and you will get 817,000. 170,000. So 1 more 0 is coming, so 81,700,000. And then you have the last one, which is Dalamora. It is 10810,000. 10810,000. Now let's calculate the profit. So the profit is going to be the revenue minus the total cost. That's going to be the profit. So profit or loss, we have to find out. So it seems most of them are profit, so we have to write the profit. So 6.6 million minus 6.57 million, so that is equal to 30,000 profit. So 30,000 profit. And then for this one, it is equal to 640,000. Profit 44 minus this one, so that is going to be equal to 640,000. And then 88 minus 88 million minus 81,700,000, so that is equal to it is equal to 6,300,000. 6,300,000. And then finally you have Dalamora, that is 11 million minus this one, this cost, the total fixed cost, so that is going to be equal to 190,000. So this is a profit or the loss for each of the thing. You have to subtract revenue minus the total cost to get the profit for the